Welcome to your week ahead for financial markets. Mike Smith, head of client education trading and senior analyst at Go Markets, to lead you around key things that might be moving markets this week. Number one is market valuations are starting to be questioned. We saw rising bond yields last week on the back of the Fed's reluctance to commit to further rate cuts in early 2025. We saw some USD strength, and this with stocks at valuation, forward-looking PE of in excess of 21 is beginning to raise questions about valuations. We saw some sell-off subsequent to that Fed press conference on Wednesday and continued on to Thursday, but we did see markets buying again on Friday subsequent to PCE data. So it's going to be an interesting couple of weeks. Perhaps the jobs data next week may be influential into the long term. UK growth is under the microscope. The BOE has been relatively aggressive in terms of rate cuts, but major concerns remain about the landing not being so soft in the UK. We do have some GDP numbers out today, which may influence that BOE's policy going forward into January 2025. Expect some movement in the GB pound, irrespective of what the result is. Of course, if it's far away from expectations, we could get a big move. Of course, we are in the throes of holiday season, and as a result, you need to check in on when markets are closed and not closed. But undoubtedly, we're going to see a lower volume and increased volatility, as we often get, potentially with that Santa Claus rally, which may or may not arrive. It may have already done its business in December, one would suggest. But irrespective of that, we've got half-day closures on Christmas Eve and full-day closures on Christmas Day and Boxing Day this week. So really only 2.5 days of trading this week. Less impact next week, but obviously we're still closed on New Year's Day. But it will not just affect stocks, it's across futures markets also. So bear that in mind with any entry and exit decisions you're making over the course of the next few days. We saw quite an influence from the Trump-Musk bromance last week. They threw their arms up in despair at the government funding bill that threatened the US government being able to pay its bills over the next weeks. And we had nearly a close down without a resolution, but we finally got something passed through at the 11th hour on Saturday. So all is good in the short term. It may come back and bite in January and February subsequent to Trump's inauguration. Bitcoin has been a fairly regular news item really for the last few weeks since Trump was elected. We saw it shoot up to 100,000 and even breach that level last week. But subsequent to the Fed impact on Wednesday night, we have seen Bitcoin pull back that suggests a short-term ceiling could have been reached. So we're back now down through 100,000, trading around about 95,000 today. Be interesting to see where we go next. There is a critical technical level just under where we're trading today, that if we breach that, we could see it even down as far as 90 in the short term. Long-term prognosis still probably quite good. Of course, we do have daily market updates every day over the next couple of weeks, apart from Christmas Day, Boxing Day, and New Year's Day. We've got our inner circle, which would normally be every Wednesday. That's been shifted to Monday, so we've got a session tonight and next Monday. We look forward to seeing you there if you can make it along. But of course, our support team is there right through the Christmas period to help you with whatever you need to. Take care. Have a wonderful Christmas. We will release another week ahead video prior to the start of next week. So keep your eyes out for that. In the meantime, wish you and yours all the very best for a wonderful Christmas. Trade safe and see you again soon. Bye-bye for now.